वेरी वार्म वेलकम टू ईच वन ऑफ यू। आप सभी का स्वागत है और नवरात्रि की सभी को ढेर सारी शुभकामनाएं। सो द पर्पस ऑफ टुडेज वेबिनार इज टू come out with new ideas in the market. Now small cap is the space that we are targeting, and we have reason to do so. So we recently saw a recovery in the Nifty. So we had this prolonged period of the market where Nifty was underperforming. In fact, Nifty turned out to be the worst underperforming index of all the emerging markets, and at a global stage we were on a YTD basis the biggest laggard. Now what has happened over the last few weeks is we've seen 1,000-point rally on the Nifty. FIs have started covering their shorts. This is tip of the iceberg. So from around 1.9 lakh contracts short that they had, that has come down to close to 1.5 1.45 lakh contracts, and the next triggers in line are possibly further short covering could happen once Nifty starts going beyond the 25,500 mark. Now 3-4 things have happened over the last 6 months. So from a reform perspective, we saw a big bang reform happening on the income tax slabs, they getting revised. Then we had the GST reforms. So essentially the 78 crore population in the country, which is less than 12 lakhs per annum income bracket, essentially will not be paying or be hardly paying any income tax, and at the same time saving a lot of money on the GST as well. So money saved is money earned, and rather money earned is either gets invested or it gets spent onto consumption. So this is where we expect this 48,000 crore is the figure that should get channeled, eventually should come into the economy, and that should bring more liquidity in the markets. And secondly, the rate cuts that we've had, that has also had an impact, and possibly there is another rate cut lined up in the next RBI meet. So from a macro perspective, a lot of things have changed for our markets, and that puts us into a space where we have a very good backdrop of the monsoon season being good. Festive season has started, and we've seen this quarter do well. The Indian economy does well in this quarter. So will the market, which has been quite under stress, shake out its underperformance and come out and play catch up? So let's see. Today's presentation is on the hidden market treasures. What are those stocks which could buck the trend or possibly perform in line with the market and deliver an alpha going into the next 4 months time frame? So the tenure that we are looking for this basket is 4 months, and we expect this basket to deliver a wholesome return of around 30% over the next 4 months. Now historically we've seen small caps do extremely well when large caps have done their bit. So we've seen the 1,000-point rally happening in the Nifty. Mid caps also participated. Now we expect small caps to play catch up. Now when small caps play catch up, it is generally a very big outperformance when it is compared to Nifty. So over the next 4 to 5 months time frame, if we expect Nifty to do well from here, possibly head towards its all-time highs, we expect the small cap index to be back in a very big way. Gone are the days where we have bull markets and bear markets of 4, 5, 7, 8 years. Now markets have become so compressed that in a calendar year we end up happening 2 bull markets and 2 bear markets to say. So here we are in the month of September, and the focus is back onto the risk appetite of the market, which is where this idea of small cap investing is coming into. So let's have a look at what the index is trying to tell us. I will try to break this into as simple as possible format, so that somebody who is new to the market can also understand, and somebody who is a well experienced one, it might be a repetition. But to break this down, the small cap 100 index is the index which comprises of the top 100 small cap stocks. Now this index, this is the weekly chart of small cap 100 index. One candle is equivalent to 1 week. And if you see over here, there is multiple resistance has been witnessed around the 19,000 area. But what is happening is, this is post the recent drop that we had, a very smart recovery was seen, and post that we are forming a cup and handle pattern on the weekly charts. Now, the breakout of this index is placed around the 19,000 area. Once 19,000 gets taken out, this index is expected to enter into blue sky territory, which means the moves could be fast, the moves could be rapid, and momentum could very well be there in the markets. Now, if we take one step further and see how this small cap 100 index is performing as compared to the Nifty. So this is the ratio chart of, or rather simple ratio between small cap index divided by Nifty index. So if you look at this ratio chart, this is again a very long-term ratio chart right from 2004 until 2025. Now, as you can see in this graph, this ratio has topped out a couple of times in the past. And every time the RSI has gone above 70. So let's say last instance was when the RSI was around 80, close to 80. The previous to that, the RSI was again close to 80. This was 21 end. The recent one was in 24. So we are very well. So right now the RSI, the weekly RSI is around 50. So we are very, very far off from being overbought in any way. And in fact, even if we were to touch the ceiling, so this ceiling is coming somewhere around 0.85, around about here. So 0.85, right now the ratio is 0.70, which means that the small cap 100 index can outperform the Nifty by a wide margin. So if this happens, we expect the small cap index to at least gain by around 15 to 20% from current levels. And what that translates into is a very, very healthy return for the individual components or stocks. Now, this does not mean that the Nifty may go down. Nifty can also go up, and along with the Nifty, small cap 100 index will also go up, but the quantum of the small cap index performance is expected to be higher. Okay, so coming to the first stock in the small cap space. So what is small cap space, to be precise? So what we have taken as a definition, so every the definitions are different for small caps and large caps and mid caps. So here we have taken small caps as any stock which is less than 1 lakh crore in market cap, and on the downside we have taken stocks which are 10,000 crore. So 10,000 crore to 1 lakh crore is where the market cap is focused on, and the universe is defined based on that. So this could be different for some of the other fund houses or some of the other platforms, but just to clarify, this is the universe that we've taken. So if you see, this is the monthly chart of Vodafone Idea. Now, what has happened in the June quarter is the government has upped their stake in Vodafone Idea, and now we're seeing the rise in volumes happening in the same. So if you see the monthly volumes of Vodafone Idea this month, which is September, we are seeing a big uprise in the volume. So volumes have gone up, so has the price move. The stock is already up 35% in this month so far. So the stock has definitely moved by a big way, but we feel that the legs are pretty long. So probably stock could head towards its next target of 10 rupees, 12 rupees, even 13.5, 14 is something that is very much on the cards. But as of now, going by the way the current setup is, if you can see the blue line is the average of the last 12 months. So the average of last 12 months, or the EMA of last 12 months, has been taken out with volumes, and this is the first stock that we have in this hidden treasures small cap basket. Right. So coming to the next stock, which is the second idea in this list, is Ashok Leyland. So if you have a look at Ashok Leyland, auto stocks have been very strong. Ashok Leyland essentially is around the 95,000 crore market cap. This stock on a monthly time frame has broken out again. So as you can see on the graph, the last stock was formed around July. So that this is July last year, and this time around we've seen the breakout happening in September. So a 12-month correction cum consolidation has been taken out, and this has aligned with the GST rate cuts, and overall the auto sector continues to dominate the market. So Ashok Leyland is a fresh entrant to this. The stock is up by 13% in this month so far, but we feel that the stock can head higher as it has entered into blue sky territory, and there is more upside to be had. As you can see, the moving averages, the stock is continuously trading above its key moving averages, and we expect the stock to deliver a punch from these levels. So sector leader auto, again a stock coming from the auto space, the first one from the telecom space, and then next coming to retail space. So on the retail space we have Vishal Mega Mart. So as you can see in this graph, this is a recently listed one, listed stock. In fact, as you can see, the participation or rather the holding of FIs have gone up in this stock. So it started with 6.58%. In March ending quarter, this was 7%, and in June quarter, it was around almost 13%. So FIs have been upping their exposure in the stock. As you can see, DIs have also lapped up. So DIs have gone from around 10% to 12% to currently 27%. So this has sort of created this slow gradual uprise in the stock, and as you can see, there are big 2 volume bars. So some of you who understand technicals would argue that this is a rising wedge pattern, which is essentially a bearish pattern. So yes, there could be some volatility in the stock, but given the kind of structure that this stock has, we believe dips to get bought into. So a short-term correction here and there may happen, but from a medium-term perspective, we expect this stock to do well and head higher, close to around 200 on the upside. So this becomes our third stock in the hidden treasure small cap basket, Vishal Mega Mart. Coming to the next stock, which is a very interesting one. So this is Caplin Point Laboratories. Now, as you can see in this chart, what we've done differently over here is we've plotted the EPS or earnings per share of this stock of the last 5.5 years. As you can see in this graph, since the EPS bottomed out somewhere in 2020, the EPS has consistently grown. So the stock, which was around 300 rupees in 2020, has created a lot of wealth. In fact, the stock has gone all the way up to 2200, 2024, 2200 as we speak. And what is noteworthy here is this stock is held by promoters very strongly. So 70% plus holding is with promoters. FIs hold around 6%, and in terms of earnings trajectory, this is a very, very solid performer. So Caplin Point Laboratories is one stock that we like, not only based on what it is delivering on the balance sheet, but also on the technical front as well. So if you check out the daily, weekly, monthly charts, again, the stock has hardly corrected in the recent drop that we've had in the Nifty. And after sideways consolidating around the 2200 mark, the stock is ready to probably scale new highs in the near future. So Caplin Point remains formidable stock in this basket, the hidden treasures small cap basket. Coming on to the next one, which is from the metal space. So as you can see on the left hand side, we plotted the copper prices. So these are the copper futures as they are traded in the US markets. So copper futures are in a very, very strong uptrend. So this is a very long-term monthly chart of copper futures from 2007 until 2020, recently 25. And as you can see, the last 2 years, copper has been trending up. So this is a rising channel that is there. Very recently, copper had, the futures had hit a new all-time high. In fact, post that we saw a cooling off. But I feel that this trend is still up and copper prices should remain firm. So whom does it benefit? So it benefits somebody like Hindustan Copper, which manufacturers, or not manufacture, rather they produce copper through their mines. So as you can see on the chart, this is also validated by what is happening on the price side as well. So over the last 3 weeks, we are seeing a very big rise in volume. So as you can see, we've highlighted the volume uptick on the weekly chart. Again, a cup and handle pattern on the weekly charts, and this stock has broken out from this recent correction come consolidation, and we feel that there is more upside to be had. So the last leg of the rally, the stock went from 150 odd all the way up to 390, 400, and in this leg we expect this previous stock to be taken out, and the stock could possibly head much higher than the previous stop. So Hindustan Copper on the metal space looks very promising. In fact, after initiating the basket, the stock has already moved 5% as of today. This is still doable. We feel that there is more upside to be had in the same. Now, this is one pharma name which has given a breakout from the falling trend line. Breakout has been witnessed a few weeks back. Again, an uptick in stock, uptick in volumes, and we feel that there is a lot of catch up to be had in this space. So we had a very linear rise in the stock from 450 to 550 in the first leg of the correction, first leg of the upward move. Now a correction seems to have started. Probably the stock should take support around the 475-500 mark, but eventually we feel the stock should head towards the 650 area. So a good upside is expected in Granules as well. Just at a standard disclaimer for those who are not clients of JM Financial yet, we have recommended this basket to our clients a few days back, and this basket is still on. We have recommended these stocks to our clients as a standard disclaimer, and the time frame of this basket or these stocks is next 4 months. Now coming to another turnaround story, this could be a possible turnaround story, very high beta place. The stock is earlier known as Indiabulls Housing Finance. Now, as you can see in this graph, very interesting development has happened recently. There are multiple cases where the stock has seen a spurt in volumes. Now, these are signs of institutional participation. So these are green shoots, not necessarily a confirmation, but looking at the way these volumes have happened and the rise in delivery quantity that has happened over the past few weeks in Sammaan Capital, we expect that this stock is ready to shift orbits. Now the potential targets of this stock are coming close to 160, 180, possibly even higher as well. But the current setup, if you look at the daily charts, is more of a bullish pole and flag pattern. Again, big volumes happening around the 120 mark. So possibly strong hands have entered into this, and we feel that this stock can pack a punch given the kind of huge underperformance of last 5 years that this stock has seen. So this stock has essentially not participated majorly in any of the market moves, and in case this was a sign of a reversal, once the breakout happens, this can be a very big alpha generator going into the next few months. So not only from a 4-month perspective, probably from a 12-month perspective also, this stock can sort of bring in a surprise, and we advise traders to keep a close eye on volumes, keep a close eye on the institutional activity, keep a close eye on what is happening on the overall holding of FIs as well. So FIs hold about 25-26% in this stock. The promoter holding is nil, and we feel that this is one stock to be had in the portfolio. Now another one is from the financial services space, CDSL. Now this is a symmetrical triangle pattern formation on this stock. Now this stock has relatively not fallen as much as the likes of Bombay Stock Exchange, BSE or Angel One, some of the broking stocks. This has relatively outperformed them, and we feel that this relative outperformance could eventually bring in a breakout from this sideways structure that is being in formation in this stock. The CDSL remains a promising candidate at these levels, can be looked upon for entry, and once it starts moving, or once the breakout happens, the stock could very well head towards its previous highs of around 2,000 rupees on the upside. So CDSL remains a very formidable pick in the financial services space. Again, this is more of a small cap than a mid cap, but we feel that this could possibly get into that borderline mid cap stock where the market cap goes up along with the stock price appreciation. Now, real estate space. So on the real estate space, this is a very interesting setup. Again, a very sharp rise in earnings per share. So the EPS growth has been delivered by this stock since July, since mid of 2020, and post that we've seen a consistent rise in profits or earnings per share in this stock, as the stock price has also gone up in a similar way. So this stock did see a bit of correction happening in this year, early this year, and now the stock is back to big volume. So this month the stock is up by 33%. Huge volume seen. In fact, the highest volume seen since 2020, highest monthly volume seen since 2020 in the stock, indicates that this is probably a big fund action into the stock, institutional participation into the stock, and this means that the stock could head higher as well. So from a technical perspective, the correction seems to be over, and now in the next leg of the rally, the stock could head towards 800, 850 or maybe even higher as well. So Anant Raj from the real estate space is something that can pack a punch, and we've seen in the past the stock has been a serious compounder. So as you can see, 2020 the stock used to be in single digits, around 10 rupees, 12 rupees was the price way back in 2020. In fact, the low was around 4.5, and from there the stock has created serious wealth in the previous leg of the bull run. Something similar probably may happen over here, not in terms of the excess, but in terms of the direction. We feel that the direction is pretty much north in the same. Now coming to another stock which is already up by 8-9% after initiation. Today the stock was up by 11, and from our entry prices the stock is around 8% up. This is Paradeep Phosphates. So what is happening is Paradeep Phosphates is we saw a big volume of backed move happen in the stock somewhere in July, August, and post that the stock has taken a bit of a hammering. Stock has come down. So July month we saw the stock moving all the way from 180 to 225 on the upside, and again the stock is back down again. So here what is happening is, in this correction the volumes are not as high. So in the corrective phase the volumes were relatively very less as compared to what happened on the way up, which means the strong hands are still in the stock, invested in the stock. And as you can see, the stock has corrected to its key moving averages as well, and now I think the risk reward is favorable for an up move. So the stock has already started moving, but we feel this is just the tip of the iceberg and there is more upside to be had in the same. Now if you look at the table below, interesting activity happening on the FII front. So FIIs which held around 1.6% in March 24 have upped their holding in the stock to 14% as of June 2025. So serious interest is shown by FIIs in the same, which is also coinciding with the wealth creation or the price move that has happened in the stock in this period. So the last 12 odd months the stock has also done fairly well. So we feel that this is a very strong anchor to have. And in this recent fall, since the volumes are not so big, we believe this number could very much be 14% roundabouts when we get the quarter ending numbers at the end of this month or at the end of September. Now coming to a metal name, Usha Martin is from the rounding bottom. As you can see on the weekly charts, metals have been doing well. We've included Hindustan Copper prior to this. Now it is Usha Martin. Again, a very solid looking chart. If you look at the monthly charts, the monthly 12-month moving average is also in line with the direction that we speak, and there is more upside to be had in the same. So Usha Martin again could do well, and as a basket we feel that metals is one space where in the short to medium term we could see very good traction happening in the same. Now on the defense, a shipbuilding space, we have already recommended the MO Defense Basket, MO Defense ETF. We feel that something similar is happening on the GRSE setup as well. So if you look at Garden Ridge Shipbuilders, this stock is very much in line with what the defense pack is doing. So the defense and shipbuilding pack had a fantastic up move. The stock were rallied from 1300 or to 3500 in a matter of few months, and this is not in distant memory. This is very recent. So this was the move that started in March, and by July we had the top in the stock, and post that we've seen a correction happening in the same. So as you can see in the correction, volumes are not that much, but on the reversal, so this is a reversal, the stock has retraced 50% of the Fibonacci move of the entire up move, and on the way up the volumes have started increasing again. So last week there was an uptick in volumes, this week again there is an uptick in volumes, and we feel that the stock has got all the ammunition to head towards 3500 and even go to a newer high as well. So GRSE remains our top pick in this defense shipbuilding space and can deliver the upside. So summarizing the entire basket, so let's say you have to invest 10 lakh rupees in this basket. So 12 stocks in all have an equal exposure for each and every individual stock. So let's assume 10 lakh rupees you are investing, so 83,000 would be the investment in each of the stocks, and this would be the sum of quantity. Now the target prices, like for example in Idea we're expecting a 40% upside from current levels, in Ashok Leyland a 24% upside. So the biggest of the lot is Vishal Mega Mart. we're expecting an upside of around 225 rupees, which is around 40%, 50% almost. Now this is followed by Idea, which is 40%, and Sammaan Capital, which is also 40%, and followed by Hindustan Copper, which is almost 40% as well. So a lot of names which have a potential upside of 40 to 50%, and there are a lot of names which have an upside potential of around 20-25% as well. The likes of GRSE, Usha Martin, Ashok Leyland, and the likes. So over the next 4-month period, we expect this basket to do well. 30% is the average upside that we're expecting. As a stop loss, we advise to have a stop loss of 15%, 1-5. So let's say you've invested 10 lakh rupees in the basket. If the basket doesn't perform as per expectations and the basket depreciates in value, have a stop loss placed at 8.5 lakhs, which is 15%, or 1.5 lakh rupees is the risk on a 10 lakh rupee portfolio. And if the view goes as expected, it could be a 30% upside potential, which means 10 lakhs could convert into 13 lakhs at the end of 4 months from here. So this is the hidden market treasure small cap basket, which you can consider for investing. Now, what we also have today in the store is how could we initiate this basket on the JM platform. So let me quickly take you through how the JM Pro app works and how we can get access on your phone, where the trading can be done easily. The ideas can be accessed in the application itself. Yeah, so I'll just start the screen sharing of my mobile phone. Yeah. So this is the JM Pro app. So if you can see on this JM Pro app, there is a research. So if you go on the research, you have equity ultra short term, equity short term, equity long term. So these are the different ideas that our team recommends: FNO vanilla option, FNO technical short term, etc., etc. So as you can see, you can scroll through these ideas, these actionable recommendations as and when they come, and you can also buy and sell based on the app directly. So this is the research corner where ideas can be accessed live, and as you can see, there is a news section as well where you are getting updates on let's say this is Glenmark Pharma fixes record date, AGI Infra fixes record. So whatever news is there in the stocks, that is also coming on the screen right away. Then we also have the Equity Ninja platform, which is where the baskets can be initiated. So as you can see, there are 12 baskets which are open. So like some of the baskets have done extremely well. The likes of Sona Chandi basket is up by 51% since last 1 year. We have the mid-cap basket recommended recently, in fact August month, last month, which is up by 6.5%. So one can simply press on invest and put your amount, and the basket will be initiated in your stock. So as you can see, these are the stocks of the mid-cap basket which are given as per the respective weights, and the entire initiation, entire trade or entire basket can be done with a single click. So just to highlight, these are the open baskets which can be done and which can be of great help when it comes to exploring or doing multiple trades in one go. So I hope today's session was a good one. In case you have any questions, queries, feel free to unlock your mics. In fact, write it in the chat window and get us with your questions.
How to choose small cap stocks if the investment horizon is for 10 years minimum? What could be the best strategy for it? What matters most in fundamentals of any small cap investing? Please explain how an individual takes a decision.
Okay, so small cap investing is not easy, point number one, because this is the area of the market which has the highest risk and the highest return, except from derivatives, of course. So why highest risk is because the beta of these stocks tend to be very high. So because the market cap is small, because the relative liquidity is lesser, the stocks could take a hit whenever the overall market sentiment changes. Now, let me ask you a very simple question. So when you buy real estate, let's say you want to buy a shop, or you want to buy an office, or you want to buy a home, what is the first thing that we look at? The first thing that we look when we buy real estate is we look at location. So if the location is good, then the other parameters gets check marked, and eventually it becomes an easy buy or an easy avoid. When it comes to equity investing, replace location with earnings. So real estate is all about location, location, location. Equity is all about earnings, earnings and earnings. So as long as there is earnings growth, as long as earnings are growing, the growth rate may be less, that is fine. But as long as the earnings are growing quarter on quarter, that presents a strong case for wealth creation in small cap stocks. So just to throw light, I've shown the graph of Caplin Point, Anant Raj. They are the stocks which over the last 5 years have delivered consistent performance. So a simple EPS is what? Earnings per share. So if the earnings per share is rising quarter on quarter, if the earnings are going up, it simply means that the stock price will also go up eventually. Now the market may miss this or may avoid this in the short term, but eventually in the medium to long term, these things are caught up, these things are ironed out, and eventually stock prices follow suit. So earnings is one thing. Second is when it comes to small cap investing, always divide your risk across different stocks and different sectors. So diversification becomes even more important. So as you can see in the basket that we've created, we've had 12 stocks. You could even have 15 stocks as well. So to bring in that kind of diversification. So what happens with small cap investing is if you take, say, let's say 10, 12, 15 bets across different businesses, a few businesses will do very well, a few businesses will do very bad, and there are a lot of businesses which will be right in between. So it is very difficult to sort of get into that, which stock will get into wealth creation early, or which stock will be the one that will be taking a hammering. So A, diversify, B, look at earnings trajectory, and C, review your holdings on a quarterly basis as well. So if any quarter the results are bad, the earnings drops, be very flexible to book profits as well and come out of the stock as well. But if you see a consistent growth, let's say 5% growth every quarter, EPS is going up every quarter, identify those stocks and stick with them. It is very difficult to do that, but yes, with the kind of screeners that we have nowadays, with the kind of data analytics we have nowadays, this can be relatively done easier. And secondly, look for stocks where promoter holding is not getting reduced, and if it is high, even better. So what indicates when the promoter holding is high is that the management is very, very positive on the business idea. Secondly, because they are not selling, there will be the free float market. I mean, the shares which are available for trading will also be limited. That will drive the prices up, and eventually when you have a smaller float and if you have a business idea which is delivering the returns, you will have a stock price that will go up. So these are some of the inputs that you could look at. 10 years is too big a time frame. Always divide that 10 years into years, into months, into quarters. Once you do that, that will be your guiding light, and based on what is the stock doing quarter on quarter, month on month, you could take a view on the price and on the business, and then fine tune your portfolio and remove the ones which are not filling in the criteria and stick to the ones which are very much in line with what you've expected to. So I hope that answers your question.
What is better, momentum based short term trading or long term investments in light of the dynamic world we live in? Not only geopolitical, but technologies and AI changes.
Yeah, so it's better to have a 50-50 split between long-term investing and medium to short-term investing or trading. Now, why do I say 50-50 is because, again, this market is not where, you just buy and hold stocks for year on year and, everything just falls into place. This is not a buy and hold market. This is a market where we are seeing cycles happening every 3 months. So there's an up cycle, down cycle, up cycle, down cycle. So if you are not placed enough, or if you're not diversified enough on the short to medium term side of the market, you may lose out on these opportunities. So have 50% of your capital deployed towards short to medium strategies, and 50% of your capital can be in long-term portfolio stocks, which are serious compounders, which are growing quarter on quarter and which have a very strong, formidable balance sheet. So this split will give you the best of both worlds, the best of investing on the long-term side and the best of investing on the medium to short-term side as well. So doing this can help your returns, increase your returns, at the same time help you participate in these short-term cycles, at the same time managing risk as well.
Market outlook for the coming year, and can we ignore this much short position of FII since a long time in the market? Why are they not confident enough towards these many steps taken by the government towards future growth of the economy and confidence in the industry as well as consumers?
Yeah, that's a good question. In fact, so if you look at what the kind of market that we've had over the past few months, this is not a bull market, this is not a bear market, this is a gorilla market. So this was basically gorilla market is where the earnings are growing at, let's say, 7-8%. The markets probably go up slightly and then see profit booking come back. So unless and until there is a serious revision in the earnings rate, let's say the earnings start growing at 10%, 12%, 13% per annum, that is where we will start seeing multiples happening on the multiplier effect happening on the index as well as the broader market as well. So unless and until the earnings take off, the markets probably will remain like this, which is sort of a gorilla market. Now the second part of the question is, why are FIs not cutting their shorts? It has been such a big period, and in spite of the government doing so much of reforms, why has the market not really taken off? Now the reforms that have been done by the government will take some time to get reflect on the ground level. So to give you a perspective, the rate cuts that we started having early this year, the impact of that has probably now started coming into the economy. The impact of these GST rate cuts, etc., will be immediate in the pockets of the consumers now, but to have the multiplier effect on the economy where people start spending more, behavioral change to take place, that takes at least 2, 3, 4 quarters. So probably from 12 months down the line from here, we might see the ripple effect, the multiplier effect of these reforms that the government is doing, and it will then start reflecting into the price. That is one reason. Secondly, if you look at the FI ownership in India, so this has primarily been driven by earnings. So FIs are very clear, they are hedge funds. If they see earnings contracting, they will reduce their exposure. If they see earnings expanding, they'll come back again no matter what the price. So once the earnings start expanding, FIs will come back into the markets. FI will start buying even if it is at higher prices. They'll still pump in money into the equity markets. Now when does that happen? Probably markets will tell in terms of the earnings. The businesses have to sort of give you that kind of numbers for the FIs to turn net positive. And regarding the derivative short positioning of FIs, that is short term in nature. We've seen some short covering happening. Again, the market is coming back to its averages. We're back to 25,000 after the rally that we saw. Now, in the very short term, the market is definitely very, very clouded. The view is not so clear. It's best to take one day at a time and based on that, devise your trading strategy and trade. But if you look at a slightly zoomed out perspective, let's say 3 to 6 months time frame, again 3 to 6 months time frame, we've dealt with one of the worst possible instances of this year, which is the tariff war. We've dealt with the visa ban, the visa revision in visa prices, H1B prices by the US. So a lot of challenges the government is facing, the people of the country are facing. Now, once everything is behind this, and let's say the US-India deal happens, all these things will be in the rear view mirror, and things will change very fast as well. So be optimistic. This is not the time to be pessimistic. In fact, if we look at the Nifty return, so last 4-5 months Nifty has been troublesome, going down, going up, going down. But if you look from the peak, we are hardly down anything. So Nifty percentage wise is the worst case was 6-7% from the top when we were at 350 low. So the point here is Nifty absolute terms, it has not gone down that much. It is a time correction which is causing us pain. Once this time correction is done, once the turnaround happens, it will be a very sharp bull market whenever it happens. So we are keeping a close eye on the reforms. There are probably more reforms in line. We are keeping a close eye on the earnings, on the RBI policy, on what the Fed is also going to do. The Fed is probably going to they have given one rate cut, probably 2 more rate cuts coming by the end of this year. So all in all, if you look at that, the equity scenario is positive, and like we had shared in the past, the gold to Nifty ratio that has already hit multi-year lows, and every time that has happened, Nifty has given a very good return over the next 2-year period. So buy the right stocks, stay invested, and don't do anything. That has to be the mantra for investing in this kind of a market, and eventually we feel that patience will be rewarded and rewarded handsomely. So I hope that answers your question, and any further questions, if any, we can go ahead, or you can even write us on social media, on Twitter or Instagram for your queries, and we'll get them addressed at the earliest. Okay, India VIX is low. What about that? So India VIX, why is it low? So very simple layman example. India VIX is the expected or rather implied volatility is the expected volatility of an underlying over a 12-month period. Let's say IV of Nifty is 11%. So the option trader at that point in time expects the Nifty to either go up 11% or go down by 11%. When this goes up, the anticipation of a bigger move also goes up. Now, since IVs have contracted, since India VIX has contracted, what that means is Nifty may not go in a big way on either side, which is the reason why I said Nifty is just down by 6-7% from the top, the recent bottom, and in terms of index, the correction is very shallow. So the anticipation of these option traders is Nifty may not go anywhere in a very big way. That is the reason why India VIX is at such a low level. Okay, so Nifty IT is going down and weak in charts. Do you see a contra value for investors with 1 to 2 year view? So IT is a very tricky place to be in. Ideally, I would avoid any sector where there are a lot of headwinds. So you have the US president, which is again pressurizing with the visas. You have an economy which is evolving with the advent of AI and stuff like that. So I would stay away from a sector which has got a lot of disruption happening, A, due to regulation, B, due to government, and C, due to technologies. So IT, I think it's best to stay out of it and probably look at it once that storm has passed. You choose different indicator on a different stock. How to know what indicator is suitable for any particular stock? I think the single most important indicator that one could use is the RSI. Very simple indicator. RSI, you can read about it on internet. There is a lot of information, but the simplest and the most reliable practical indicator according to me is RSI. It works in all time frames, whether it be hourly, whether it be daily. Don't go below hourly because that is too less as a time frame. So whether it be hourly, daily, weekly, monthly, RSI is the king of all indicators, because RSI is all about momentum, and momentum at most times is not visible with the naked eye. So you can see a direction of the stock with the naked eye, but to see the momentum of the stock with the naked eye is not so easy, which is why it adds a new dimension to the charts, and which is why RSI is something that we recommend. But yeah, at times we change these indicators when we are doing hourly charts, when we are doing day trading in index, or when we are doing options trading. So I mean, different segments of the market demand different platforms, different tools, and different skill set. But when it comes to cash based investing, I think RSI is the king of all indicators. Okay, so do you also provide derivative calls in the app? Yes, we do provide derivative calls in the app. They are very much there. Okay, Nifty gold versus silver, which should give the better returns in the next 1 to 3 years? So the next 1 year period, I think silver is the place to be. Silver, stay invested in silver. There's probably more upside to be had. Gold, I think the best case scenario is about 10 to 12% return from here. So gold is something that I would advise to book profits and probably move to Nifty. So Nifty and silver, these are two places where one could stay invested for the next 12 to 24 months. Another question is, since the basket was given out last week, can it be initiated now given a couple of stocks have moved but the overall basket is flat? Yes, the basket can be initiated at these prices also, although 2 of the stocks have moved. Some of the stocks have also gone down, but the basket is still at cost, very much close to cost. So the basket can be initiated at these levels as well.
Thank you, Rahul.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.